Is the bond market screaming recession or something else?
Well, if it's not screaming, it's speaking very loudly. Yeah, Brian, I think it's starting to discount a pretty high probability of a downturn sometime in the next 6-12 months. Yep.
Is that globally or is that the U.S.?
Well, I think it would be globally. I think the U.S. economy is stronger than most of the rest of the world. The European economy is pretty close to recession already. The German economy may be in recession. And, of course, the Asian economy is starting to struggle a lot as well. You saw the central banks in Asia cut interest rates pretty aggressively yesterday in anticipation of much, much weaker growth. So if the U.S. is in recession, the entire global economy will be in recession.
Well, the reason I ask that is I wonder, sort of who's leading whom, because you look at all these negative interest rates around the world, and particularly in Germany, and I just wonder if our bond market, maybe it's signaling a recession, but could it also, Mark, just be signaling that yields are low because people are buying our bonds? Because even 1.7% is better than negative 0.5% in Germany.
Yeah, sure. No, that's part of the story. Absolutely. But I think it points to a fundamental problem, and that is the trade war. The trade war is doing real damage across the globe, and it's creating a lot of uncertainty and a great deal of concern. And, bond investors are looking for the safest place, and that is a 10-year U.S. Treasury bond. So, yeah, I think the trade war is the root cause of all of this.
What's the thing that could take us out of recession, Mark? If the trade war ended tomorrow, Trump tweets today, calls Xi Jinping, we've decided that we're going to hug it out and there's no tariffs anymore and everything's fine. Does that take us out of that danger zone?
Yeah, I think that would go a long way to it. Sure, that's a necessary condition at this point, I think, for us to avoid an economic downturn. The economy is struggling. Federal Reserve will probably have to cut rates anyway to make sure that we don't go into a downturn. But yeah, I think the thing that is really at the heart of the global economy, our economy's problem now, is this trade war. If the president takes it away, and I think he could do that pretty quickly, then the risk of recession goes away.
So bottom line, we may be tariffing our way into recession. If there is a recession, we caused it.
Yeah, and one thing I will say, though, at some point the president can't take this back, right? Because the thing will have its own dynamic. I mean, in fact, if growth continues to slow and unemployment here starts to notch higher, at that point, I think consumers lose faith, pull back, and that's a recession, almost regardless at that point of what the president does or what the Fed does.
So have we lost control of the car, or is there still time to, steer back into the lane?
I think there's still time. I mean, we're still creating enough jobs to keep unemployment stable. Consumers are still okay. They're kind of oblivious to what's going on here, at least so far. So I think there's still time for sure. So, it's not a done deal, but the president has to, I think, move pretty quickly.